What's up, guys? Welcome to the Cashcraft, your daily dose of finance and technology news and updates. Grant Cardone just bought another $100 million in Bitcoin, but he's not betting against real estate. He's combining them into something Wall Street's never seen before. The guy who built a $5 billion real estate empire is now saying this hybrid strategy could beat REITs. That's a direct shot at one of the most stable investment vehicles in traditional finance. And he's backing it up with his own treasury. Here's what makes this move different from every other billionaire jumping into crypto. Cardone isn't dumping real estate for Bitcoin, he's layering them. His company now holds Bitcoin on its balance sheet while simultaneously operating income-producing properties. The thesis is simple but radical. Use real estate cash flow to fund Bitcoin accumulation. Let Bitcoin's appreciation potential amplify returns and create a structure that combines the stability of rental income with the explosive upside of a scarce digital asset. This announcement came during a Fox Business interview on Wednesday. Cardone said the strategy could outperform traditional real estate investment trusts, which have been the go-to vehicle for passive real estate exposure for decades. REITs typically return 8 to 12% annually through dividends and property appreciation. Cardone's betting he can crush that by adding Bitcoin to the equation. Now here's where it gets interesting. Most real estate investors see Bitcoin as competition, digital property versus physical property. Cardone's flipping that narrative entirely. He's treating them as complementary assets in the same portfolio structure. The real estate generates predictable cash flow. The Bitcoin provides asymmetric upside. Together, they create a risk profile that neither asset delivers alone. This isn't his first Bitcoin purchase. Cardone's been building this position over time. But this $100 million addition signals conviction at a level most institutional players haven't reached yet. He's not allocating 1 to 2% of a portfolio as a hedge. He's going deep enough that Bitcoin's performance will materially impact his company's valuation. What most people don't realize is that this strategy only works if you believe two things simultaneously. First, that real estate will continue generating stable income regardless of Bitcoin's volatility. Second, that Bitcoin will appreciate faster than real estate over the same time horizon. If either assumption breaks, the whole thesis unravels. But here's the thing nobody's talking about. Cardone isn't just making a bet on Bitcoin's price. He's making a bet on the future of corporate treasury management. He's saying that companies sitting on cash or conservative investments are leaving massive returns on the table, that the old playbook of bonds and money markets is obsolete in an era where scarce digital assets exist. The real insight here isn't about Bitcoin versus real estate. It's about how the next generation of investors will think about asset allocation entirely. For decades, we've been taught to separate asset classes into neat categories. Stocks here, bonds there, real estate over here, crypto in a separate box if you're feeling adventurous. Cardone's erasing those boundaries. He's building a company where the balance sheet itself becomes a hybrid instrument, where the cash flow from physical assets funds the accumulation of digital ones, where traditional finance and crypto aren't competitors, they're components in the same machine. This is what institutional adoption actually looks like. Not Coinbase accounts and cold wallets, but integrated strategies where Bitcoin becomes part of the core operating structure of real estate companies, tech firms, and eventually every corporation that holds a treasury. The question you should be asking yourself is whether your own portfolio is built for 2026 or still optimized for 2016. Because the investors who figure out how to blend old and new assets are going to capture returns that pure play strategies in either direction will miss. Personally, I'm watching how this plays out over the next 12 months. If Cardone's hybrid model starts outperforming traditional REITs by a meaningful margin, we'll see copycats across the entire real estate industry. And that's when things get really interesting. That's all for today, folks. If you found this helpful, make sure to like and subscribe to the Cashcraft for more finance and tech news. Drop a comment below with your thoughts, and I will see you in the next one.